Thanks so much for joining us here on Halloween. I'm Marlon Bowling with you with a look at our ag commodity trade as we wrap up this month of October here. We're going to bring in a little extra help from Scott Gecas. He's at the trading floor in Chicago at the CME Group. And Scott happens to be with Longleaf Trading, and he joins us to take a look, first of all, at the grain market action here. One side note here, Scott. This morning, another big bounce in the value of the Dow, and some folks have been expressing concern over that, and also the height of the U.S. dollar and its impact on all these ag commodity trades. So what's the latest? What's the talk on the floor here this morning about that?
Yeah, the earnings over last night, I mean, they came out better than expected. That's why you're seeing a big pop in all the equities. The strong dollar is definitely playing a big factor in all the commodities across the board, everywhere between the grains, even all the way down to oil. So we're definitely going to keep an eye on that. As soon as you start seeing the weakness come in with the U.S. dollar, if it comes in, you'll see a bigger pop in all the grains just fundamentally worldwide.
Last I checked, the Dow was up about 386 points again. The dollar value, we can take a look at the index as it stands right now on the futures board. Currently, December futures are 120 points higher yet again, and it stands at 96.910 right now. Crude oil trade, we have been watching that this week with keen interest. Right now, it's a little bit higher. Not much, but some. December West Texas Intermediate crude would be 24 cents higher at 66.42 per barrel. Got as high as 67 bucks, but backed away from that a little bit. Heating oil trade, that's how we trade our diesel fuel. That would be on the NYMEX. We have November trading 2 pennies higher right now, and it's basically at 2.28 per gallon. Now to the grain trade here, starting with the corn market this morning. We have December corn down a half cent at 3.64 1/4. It hasn't done a whole lot today, but it's kind of drifting a little bit higher than where it was. March now 3/4 lower at 3.76 1/2. And if we look at the soybean market, it's fairly flat today. We have the November now in delivery. January is up a penny. It's at 8.48 per bushel. March up a half cent at 8.61. Let's move on and take a look here at our wheat market today. The pressure seems to be nonstop in the wheat complex this week, where we have December Chicago wheat now 8.5 lower at 4.91 1/4. Kansas City wheat also under pressure. We have December down 8 3/4 now at 4.86 per bushel. That's within a penny of its low of the day. How about Minneapolis wheat? On the spring wheat trade, we're down 5.5. Last trade, 5.66 per bushel there. Let's talk about this wheat market here, Scott. What are the traders on the floor telling you about that as far as why it is so weak in the knees and just not getting any traction at all here lately?
Yeah, with the wheat market, it's in a weird dynamic. I mean, it's actually with this move down lower here, we're at Longleaf, we're looking at a buying opportunity. And that's due to the fact that it's just the U.S. dollar putting pressure on the wheat prices. The Russian wheat prices are also dragging that down, but that is also making U.S. wheat become more attractive. Now, that is confirmed. As traders, you look for confirmation. You don't just look for, that gut feeling. So the confirmation came earlier in the week when Egypt had that tender offer. That's a big bullish catalyst for for U.S. wheat. So we're definitely keeping an eye on that. If U.S. wheat becomes more and more attractive, you're going to see more and more exports go out. The price should get a decent lift.
Just real quickly, do you think the wheat is adding pressure to the corn trade today?
I think the soybean and the corn market are the leaders. I don't think the wheat market is going to be an indicator to either one of those. So we're just going to keep an eye on that U.S. dollar correlation between the wheat prices and the dollar.
Okay, we'll pause for a quick little break here, Scott, and then I want to talk to you about the cattle and hog trade as it is shaping up here today on a Wednesday. We're talking with Scott Gecas, and we'll be back in just a moment. Don't go anywhere. We're talking once again with Scott Gecas right now. He's with Longleaf Trading, and he's at the edge of the trading floor at the CME Group in Chicago today. When we talk livestock, interesting stuff at work in the livestock sector, and I was curious what the traders are talking about. First of all, on the cattle side, but I can't wait to hear your thoughts on this African swine fever outbreak as well. So what's the talk on the floor today, Scott?
Just across the board, without any of the headlines going with the risk involved, you're still running into big supply concerns. Cold storage are at record levels, both cattle as well as hogs. Production is still ramping up, so without that expected demand coming in, without exports showing up, we're going to still remain a little bit bearish. The live cattle traded below that 17, closed below 117. That's a very bearish catalyst. We could test 115. if we can get another close below that. It popped up above 117 today. As I was walking up, it was waffling right around that 117 level. So if we can get a close and a little bit of continuation, it's got room to go to the downside.
Now, what are they saying on the pork side about this ASF outbreak in China? That seems like you keep hearing more and more stories about it.
Yeah, and it's interesting that you bring it up because more and more stories. So we've been talking about the African swine fever for all summer. So it started at 10%. If it affected 10% of China's herd, that was the world's pork exports. Now they're saying 16%. It's clear that we're not getting the exact information out. Early estimates are in the mid-20s. So if that is the case, we're just going to wait for those pork exports to show up. Once they show up, you're going to see a big pop in the hog market.
The mid-20s. Now, I'm just curious, what is that based on anyway?
It's just based on all the cattle in China being affected by it. So the African swine fever has no cure, they can't control it. You're seeing small farms being affected by it 1,100 miles apart. So it's clearly not contained. It's spreading rampant. We've already seen certain cases in Europe. So we're going to keep an eye on that. If those numbers actually come out with true numbers, I think you're going to see a very big spike in the hog market.
Well, Scott, thank you so much for the information. Great to visit with you, and appreciate it. Look forward to next time when we get an update from you. Scott Gecas is with Longleaf Trading, and he's right there in Chicago.